Hi everyone, and welcome to another episode of Green Steves. I'm joined as ever by Stephen Sorrell, and our guest today is Manon Derelle. Manon is a director in the energy and resources team at Baringa, which is an expert financial consultancy. Manon, do you want to just sort of say a few words about yourself and how you ended up in kind of energy, all things energy?
Yeah, that sounds good. So great to meet you, everyone. I'm Manon. I'm an economist by background, so I studied economics, and I was always very interested in large infrastructure, which has massive externalities for consumers. And so in my first role, I asked to be placed in one of those teams, and it ended up being energy. And it turned out to be a fascinating sector, which I never wanted to leave since then.
Yeah, I think that's true for quite a lot of us. Steve, I've never actually asked you how you got involved in it.
Um, I just did some environmental legal work, I suppose, a long time ago now, but policy based. And then because I'd done other projects of infrastructure projects like schools and PFI and all that type of thing, that's how I got into the environmental side. And once it's got its hooks into you, that's it. You're dead meat, aren't you? You're sold for life.
I think that's right. I think there's lots of willing converts once we find ourselves in it. We're doing this podcast, I should say, we're doing this podcast on the 2nd of July, so just before the UK general election. So some of the landscape may look a little bit different by the time we actually hit the publish button. One thing that won't look different is that the UK has a commitment to net zero by 2050, and that will include up to up to 70 gigawatts of solar being required. A huge challenge, even given where we are, and there's been huge progress. So I think in the first quarter of 2024, up to 50% of the power generated in that quarter was done by renewables. So I think open first question to you both is obviously solar's made huge strides, but there's a really, really long way to go for any new incoming government.
Yeah, I think that's fair to say. There's significant ambitions and very ambitious deployment targets. And I think it's also fair to say that some of the subsidy regimes have kind of lagged slightly against some of those ambitions. And that's obviously not been helped with the increased cost of renewables that we've seen in the last couple of years.
And on the policy side, Steve, I think that there's a lot of people in the green area who've been a little disappointed with the performance of the government over the past few years, really, in that you don't really sense a huge sense of ambition, do you? And of course, it's not party political in that sense. In that Chris Skidmore, after all, and a Tory MP saying, "Look, hang on a minute, all green growth that is on offer here, and it'll improve the economy and everything." But on the other hand, the Prime Minister went backwards, really, in some ways. So I think there's a sort of cautious optimism that whatever happens, we might get a bit more policy clarity after the election, and it's got to be policy based to get the investment in, hasn't it? I think we're all agreed on that. So fingers crossed.
Yeah, man, I know one of your core areas is sort of competed auction round based subsidies. And I know it's something you're a bit of an expert on. Obviously, here in GB, that's primarily the contract for difference as one of the main renewable subsidies. Now, historically, solar's not really been a great recipient of it. They've not been eligible for quite a lot of rounds, but now they are available again in the established auction pot. There's multiple pots for things available. I think one of the stories for me of the last allocation round of CfDs was a lot of attention was paid to the failure of the offshore wind allocation process, but actually the established pot was pretty small, and the costs of sort of solar farms have been rising with inflation and indexation. So I guess first question, what do you think the CFD is the right answer to kind of the solar challenge that we face? And if so, it feels like it needs a bigger pot size, doesn't it? It feels like it needs more capacity.
So the last round, as much as it was seen as a failure for the offshore wind side, this meant that the other technologies that were in the pot of established technologies benefited very significantly. And so this was actually a great story for solar as well as onshore wind, because the absence of offshore wind, which are very large projects and also take quite a lot of the budget, means that there was a lot more budget for some of those technologies. So now in the upcoming CfD round, those technologies have been separated into different pots again. So you've got offshore wind that is competing separate from onshore wind and solar. And as a result, also a much smaller budget being allocated for onshore wind and solar.
Mm.
This, in our analysis at Baringa, we do quite a lot of analysis of that round for our clients who are developers in that market. And we expect prices will likely be able to rise in that round because government made a number of tweaks which allow for those prices to rise, which were necessary. But with higher prices, that also means that the budget doesn't quite go as far.
Yeah, so you're less likely. You're less likely to. If you win, you do better, but you're less likely to win.
Well, yes, there's basically going to be a smaller expected capacity that will clear, and that's also because of how the budget is interacting with other parameters that are defined in the scheme.
I know that CfD is not the only way forward for solar, but have you projected whether with those small budgets in that pot, we as a country can actually make the 70 gigawatt target?
Well, I think that it's not currently looking on track. However, we can't really presume of what future auctions are going to do. And so also what Labour government might do with respect to that budget. I think at the moment we're behind, but with every allocation, you could raise the budget or the capacity target to try to meet those ambitions.
I think what's interesting is in the kind of larger scale solar plants that we've been working on, the ones I've done haven't actually gone for a CfD.
All mine, Steve.
Yeah, and so actually there's an extent to which, just as a bit of a challenge, I wonder if the CfD scheme is working quite as well as it could in respect of kind of larger scale solar. Now, some of that might just be because over the last few years you've seen really, really high wholesale prices. So obviously it's looked pretty unattractive, and maybe people are thinking, hey, with a couple of good years of upside, this thing isn't worth it. I wondered if do you think there's a fundamental challenge with it for kind of solar and some of those established technologies that think, do you know what, actually I can probably carve out a pretty decent business case with a long-term PPA and leave myself open to the upside that CfD takes away?
I think that this was a very major question for the last couple of rounds, especially for round 4, where basically the costs of renewables hadn't gone quite up yet and power prices were very high. So basically, we had renewables look at CfD versus other alternative routes to market, such as PPAs.
Yeah.
And they were then going into the CfD saying, well, I'm not going to bid less than what I can get elsewhere on the market. So the CfD was almost a little bit of a backup option at that point, or at least an alternative. I think now you've seen a bit of a change in those dynamics. Last year, the costs have increased and the power prices have started to re-normalize. So for round 5, those dynamics were much more finely balanced. Now we're seeing the costs come down a little bit compared to the peak, but the power prices have gone down further, which means that the PPA case can work for some, but will definitely not work for all projects.
Yeah. So it might well be that it's looking, for some of our local authority clients listening, it might well be that it's looking more attractive now than it perhaps did 2 years ago.
I would say 2 years ago, we heard a lot more of those discussions than now.
Yeah.
I just take the view, I think, Steve, on my projects, that you just got to look at it. You've got to factor it into the mix, haven't you, and have a look and see what the position is. But
exactly.
Can I just go off piste for a minute? In that, I think there's potentially another threat, to solar, and that is if it's in the same pot as onshore wind. We've dealt with onshore winds, and we're coming back to that in our podcast series, Darren. But effectively, the position is that Labour have said if they get into government, they would sort out the planning issue, which is, of course, the notorious footnote 52 that set provisions for onshore wind that don't exist anywhere else. And they could literally just abolish that overnight. It wouldn't take masses of consultation or the rest of it to do it. And in some ways, you might say, well, where else is the government going to find 30 gigawatts of power in 10 years that can actually be built out? But the trouble is, if the pot's small and there's massive competition because the shackles are off wind, maybe solar would get squeezed. What do you think about that?
I think you're right that if government lifts the restrictions on wind, there's going to be a lot more wind competing. What I would hope this would come with is also just a greater pot size in order to deliver overall greater capacity that will help meet those net zero targets. And I think beyond that, to be honest, for scale, I would actually look at more offshore wind as well, because those are the projects which are extremely large, albeit they're slightly more expensive currently than the onshore technologies because they've faced much higher cost increases. But if you really want to achieve scale, then nowhere else do you get 2-3 gigawatt sized projects than in the offshore wind space. And there's some complaints around local communities, especially in the coastal areas, but there's understandably less NIMBYism as well in the offshore wind space.
Yeah, of course. I think that's right. I'm going to move us back to solar, and one of the other parts of the revenue stream that people kind of have been overlooking, possibly because they don't really understand it's there, possibly because it's a little bit more in the grey, and that's REGOs. And this is effectively a renewable certificate of guarantee of origin. So it's the way that people realise effectively that something is renewable, and these are tradable certificates. So back in sort of 2017-18, these things were selling for kind of almost like £1 a certificate. They were relatively valueless. Now I think, and Manon, you've probably got more up-to-date data, but I think they're selling for around 20 quid, something like that. They're in that market, and I think at least in the short term to 2030, I think that trend seems quite likely to go up a little more as the demand for renewables goes up, and as there's still effectively not sufficient supply to meet that demand. It'd just be interesting to see if you've got a sense of, do you think the REGO market is kind of capped out at the moment, or do you think it is likely to trend upwards in the shorter term?
So I think it, as you say, it's largely driven by some of the supply and demand dynamics. I don't follow the REGO market particularly closely in my day-to-day role. My understanding is that it has increased significantly, but I think it's also started to normalize or trend down even slightly. So I think it'll be very interesting to see. But basically, you do need the REGO price to kind of keep playing that incentive role in order to also play this role in terms of deployment, basically, and facilitating that deployment forward.
Isn't the case as well, though, that we need the money from the REGOs to effectively feed into business cases for new renewable energy installations and assets? And I think I read somewhere, Steve, that there's a danger with the inflation of the REGO price that effectively aggregators can skim off a lot of that profit by buying from uneducated generators, and it's not going into new projects which are intended to provide more renewable energy.
I think that's right, and I also think there's always been, and Steve, I don't know if you've come across the same, there's always been a reticence to build the REGO price into a business case for a solar farm at the beginning, because it's uncertain, because it moves about so much that actually baking it in from the start is really, really hard. So you're not even realizing the value in terms of planning, because it's so irregular and because it's so uncertain, you can't really rely on it.
Yeah, that's true.
I think that renewable generators would be careful in terms of baking some uncertainty in the value, and so therefore they would probably use some relatively conservative assumptions around the value of those REGOs. In general, they would also look at other potential sources of upside. So for example, I'm thinking about transmission charges here. And I think depending on the location on the network where projects decide to implant themselves, then there's some locations which can be particularly beneficial. So for example, it can be quite beneficial to locate yourself on the distribution network, which is the more local network, because there is something called embedded benefits, which is a set of charges which you're avoiding. There's also incentives which are given on the transmission system, especially incentivizing solar plants to locate close to demand sources, basically, and close to demand centers. And that also means that the projects which are located in the further south in England might actually get a revenue source from implanting themselves on more constrained parts of the network. So that's also another thing to think about in terms of optimizing the commercial value of the projects.
Isn't that part of that's part of REMA as well, isn't it? The idea of locational pricing is something that's being looked at national level, isn't it?
Yeah,
So,
just before we stray on to REMA and away from embedded benefits, because this is funny because I talk to my clients about embedded benefits all the time, and I watch their eyes glaze over, and they don't kind of realize that this is really, really important. So just to flesh some of this out, embedded benefits take a number of forms. They can take the form of reduction in transmission and distribution losses. So effectively, embedded generators reduce the amount of electricity that needs to be transmitted over long distances, and there's efficiency gain, cost savings. There's avoided transmission network costs. So that's a charge called, you'll often hear referred to as TNUoS, which is quite a big charge for those who are connected to the transmission network. There's also something called distribution use of system benefits, which are effectively benefits for reducing the load on the distribution network. And then there are also some capacity and grid service sort of bits. So when we refer to embedded benefits, we refer to a lot of things. And I think it's just important that people know it. But Manon, you're completely right that actually, I think for the really sophisticated operators, this thing really, really makes a difference. I think one of the challenges is being sophisticated enough to look at that from the beginning. So it'd just be, I suspect this is the type of work you're doing for people. Is this just something that you kind of map out across the country? So if I'm a local authority looking to buy a solar farm anywhere in GB, do I come to someone like you and say, look, help talk to me about some of the areas where this is better? I'm just thinking, how would our clients look at this?
Yes, so basically our clients come to us in order to get primarily projections around all of the revenue lines that make up their business case. So there's power price, but there's all these other sources of revenues. And so there's the TNUoS, so the transmission charges, which can be negative, so which can form a revenue, or there's these embedded benefits for which we have quite sophisticated models, which may mean that we're able to project them. There's also capacity markets, so it kind of depends. It's not something that can be cumulated with subsidies because it is another subsidy. So it would only be available to solar projects that develop themselves on a merchant basis or solar projects that have exited their CfD contract. This would be quite a small revenue line, but that's another one that we would also be looking into.
And is there one capacity market aside for a second? Is there one of those embedded benefits that moves the dial sort of more than the others? I recognize it's a really nuanced picture. Is there one sort of trend that our clients should be looking for? As in, is it sort of look for unbusy parts of the distribution network? Is it sort of connect in certain areas of the UK? I'm just trying to think, recognizing there's no one answer. Is there a general trend that is helpful to look for?
I think it's more looking at something that's going to make your business case, better. And I think that that's usually a combination of elements. Yes. So where to locate on the network, and the level of TNUoS or embedded benefits that you get is one of those many aspects. But you're also looking at economies of scale. You're looking at other potential upsides. You're looking at potentially signing framework agreements for your procurement. You're thinking about your O&M strategy. So I think it would come as part of a wider set of considerations. However, what I'm seeing is, those transmission and distribution charges basically have kind of shifted the dial between making solar relatively more competitive than wind, primarily because wind is largely located in Scotland and therefore are facing some very, very high charges, which solar isn't facing. And that has resulted in relatively favorable outcomes for solar in recent allocations.
Yeah, that's really helpful. Thank you. So moving on to Steve's point with regard to REMA, because obviously all of that you've just described is what's happening right now, but obviously the energy market in the UK is being looked at, and there is a review of the way that the energy market is being dealt with. I think lots of our clients will have heard phrases like wholesale market splitting and locational marginal pricing, but I think shall we try in a few sort of brief ideas to just kind of summarize kind of what the review is doing and some of the bigger ideas in it and what some of the most just obvious tangible effects of it might be?
Sure, that's a big topic. I think I'll make a start. And
yeah.
A
team effort, this one, Manon.
Currently, there's a number of locational signals on the system. So the signal is basically around trying to ask generators to locate themselves where it's most helpful for the system. And this is currently done through these network charges. So basically the TNUOS distribution charges. There is some thinking that this might not necessarily be the best way to do this, and therefore government is looking into implementing those locational signals through wholesale prices. And so the way this would work is basically having different zones on the system and looking at the balance of supply and demand in those zones. And this would mean that the zones which have a lot of renewable assets and very low demand would have quite a low price. And the zones which have a lot of demand and not a lot of renewables would face a very high price. So that over time, the assets would look to locate themselves, if possible, in those higher price zones. This would also...
That's really helpful. So just pausing on that locational marginal pricing, because it's a big
we've
game
moved
changer.
away from the locational marginal pricing. So this is where the price would be defined almost at a nodal level, which is very, very granular. I think if anything, it's probably going to be done at a zonal level, which is a slightly bigger region.
Yeah, and that presumably is as much for simplicity as it is for anything else, because doing it at the pure node by node station is pretty complicated.
Yeah, that's right.
Yeah. So then obviously that raises some huge challenges, one for the wholesale market, but also for some of those regimes we've been talking about, like CfDs, which obviously turn off the back of the wholesale market price you achieve.
Yes, so REMA would also look at some changes on some of those associated schemes, the CfD being one of them. For example, if we were to think of the introduction of the zonal price, there's a question of how do generators get compensated? Do they get compensated against the price which they are facing in their zone, or do they get compensated against some sort of national average? There's also some discussion around actually doing a deemed CfD, which would be compensating generators based on an estimated volume for their plants as opposed to the actual volumes. So there's a lot of discussions around how this could be implemented and how those different parts of the energy markets could interact with each other.
And I'm guessing for our listeners that have kind of already got working solar plants and things like that, they just like all other energy market participants, there isn't really a fail-safe way to future-proof yourself against this. This is something that's going to come, and there's not really an excellent strategy for kind of mitigating that risk at present.
I think it creates a lot of uncertainty. Primarily, I would say for developers or who are thinking about investing now, because those changes would probably come in the next couple of years. However, good policy making usually aims to mitigate some of that uncertainty, and therefore, you could think of ways to introduce those changes that would potentially insulate to some extent existing installations like grandfathering.
Yeah, I think that's right. One of the things that we've not touched on, so we've touched briefly on locational marginal pricing. One of the other things sort of being talked about is wholesale market splitting. So effectively considering an option to kind of separate intermittent renewable generation from other types of generation. The idea being that this would kind of stabilize revenues for renewables, but may impact their assets depending on their location and demand levels. Again, I just maybe worth getting a sense of how likely this is to happen and whether or not this might represent the future as opposed to a locational approach.
I think while it's been discussed, it's not something that we are discussing very much at Baringa, and I think that that's probably a good indicator around the likelihood. We're advising government on all of those issues as well as developers, and that's not something that I've heard a huge amount about.
Yeah, no, that's really helpful. And then in terms of your sense, perhaps of, I guess maybe just on a purely kind of advocate of the system, do you think locational marginal pricing is a benefit for the system as a whole? I mean, it seems to me that it obviously drives generation to the places where it's needed the most. So it supports things like grid and all of those other aspects, which is the underlying rationale. But is this something that sort of you as an advocate of the system are in favour of? Do you think it's something that is a positive step forward?
I think it's a very nuanced discussion. So I think first of all, again, it's going to be zonal pricing, if anything. And basically, it can be a good thing if it interacts in the right way with all of the set of other policy frameworks that go around it. And I think, as with many things, the devil is in the detail, and there can be a lot of unintended consequences if we don't get the broader framework right. So there can be a world where it's implemented and basically works as intended and delivers the right outcome. And there can be another world where, it just makes the business case for some renewables, especially in the north, quite difficult.
I think one of the issues with this as well, surely though, is its level of complexity, isn't it? So for us, when we're dealing with public sector bodies and local authorities who may have done plenty of other types of infrastructure projects in the past, they aren't particularly skilled at this. Therefore, they come to us to help them out with those things. But just keeping track of the where this is going and how they develop, what the arguments are. Because remember, this isn't the only one, of course. There's a whole range of stuff come out about the planning changes, and they're quite technical in planning law terms, and all these other things going on. And that's one of the problems for the politicians, I think, isn't it? There really aren't any simplistic answers. You have to get you right into the detail to get all this right. Are you confident they will do that? That whoever gets into government, that in 5 years they'll have sorted a lot of these issues?
Well, I think that this is certainly a priority for them to look into those issues, and they would be quite careful in terms of designing those schemes. And we're involved in their design as well, so I'm hoping that we will get this right too. But I think there's more broadly, there's a question of getting the right locational incentives and making sure the system is very efficient from an economic perspective. But there's just also, this needs to be balanced against the wider decarbonization objectives and the need for pace and scale, and also consumer costs and the cost of living. And so I think government are having to find a balance between all of those different objectives and need to design the policy framework that achieves that balance, which is no mean feat.
Yeah, it is really challenging when you think of the amount of proliferation of these assets that we need to, on top of that, be changing the game at this time feels really, really challenging, because obviously stability is the thing that breeds investor confidence. Talking about areas where there's regulatory complexity, one of the things that Steve and I end up doing quite a lot with our bigger solar projects is battery co-location. And this is another one of those examples to me that it's something that should obviously be happening for very large solar plants. It obviously makes sense. it creates additional investment returns, it creates alternative revenue streams for an intermittent asset. It's a bit of a no-brainer in a lot of ways. And yet again, I think this is one of those areas where the regulatory complexity proves to be a barrier, to be a hurdle, and whether that's something from kind of disposal of batteries and the uncertainty of that, or whether or not it's kind of the import-export grid methods, or whether it's as simple actually as, Steve, I don't know if you've had the pleasure of trying to explain a route to market power purchase agreement to someone, but who's not familiar with it. But again, I think I sort of quite often get that eye glazed overlook. So yeah, just a bit of a question to you both really about some of the challenges you've come up with in terms of the complexity of this, because it seems complexity is again kind of the key challenge.
Yeah, I think that's right. So one of the complexities we've seen was also the restrictions that are placed on the battery. For example, if the battery was to be co-located with a solar asset under the CfD regime. So that's meant that to date, it's been done on a more kind of PPA/merchant basis. We know that government is looking into this to address this barrier, but that's been quite an important barrier. Another barrier has been the cost of the battery, which also went up at the time. And so that meant that because of that increased cost, as well as some of the restrictions on the operation of the battery, it wasn't quite as economic. But on the plus side of that, you've got, when you get it right, massive synergies with the solar asset in terms of cost and in terms of the generation profile. And we're also seeing actually in our projections that basically combining battery deployment with solar deployment helps maintain a high price for those assets. So it kind of reduces the level of cannibalization that we're seeing on the system, which is basically the effect of wholesale prices dropping when you have too many renewables.
There was a lot in that, Manon, and there's a couple of points as we come towards a close that I'd just be really interested in. So the first of those was cannibalization, and I think this is my pet hobby horse. So it's interesting to see that you're now beginning to see that in sort of trends. So this is something that's moved for you perhaps from being something that's theoretical to something that is a threat to solar projects that do not have battery storage.
So basically, we're seeing that in our projections, actually, and there's some super interesting contrast with different markets. So in Spain, you have very significant solar deployment combined with less battery deployment, and we're seeing cannibalization of up to 40% towards the back end of our modeling horizon, so in the 2040s. In the UK, cannibalization goes up to 25%, but doesn't increase much beyond that. And that's primarily because we're seeing that battery deployment, which actually helps maintain that business case. And that's because the UK is leader in battery deployment and is expecting to continue deploying this at scale, as well as electrolyzers as well. We're also seeing some more demand sources coming online.
Yeah, that's really interesting. And it sounds more like listening to what you say there about your projections, it sounds more like it's still a longer term forecasting problem than it is a sort of the reality of today problem. Is that fair to say?
It's something that exacerbates with renewable deployment. We're obviously seeing some today, but then it gets, it gets more as there's more renewables on the system, but we don't see prices collapsing in the same way as we do in other markets here in the UK.
Yeah, that's really helpful.
I think the thing is as well is that in your day-to-day work on projects, if you like, there's a number of areas that are worth thinking about. And of course, one of them is that you can add battery storage at a later stage. So you can build your solar farm and then add battery storage later if you wish. And of course, you can also have co-location of wind and solar. You've got to get the design right, but that's all. And in answer to your question, how often do we come across this? I haven't come across it as much as you, I don't think, Steve, just because working at the project level, we always model battery storage, Manon. So every time we do financial modeling, we'll always do with battery and without battery. But there's lots of other issues that come into that, like negative cash flow and what the overall payback period is and all the rest of it. And so even the preliminary phase, and that's going to be our next paper is going to be on business case modelling. But even at that first stage, it's quite complex. So I don't think we, in many of the projects I've been involved with, Steve, have really got into the latest stuff that you're talking about there yet. And again, I come back to the same place, that they'll need help when they do.
Yeah, I think that's right. I think that's really, really helpful. One final point for you both, which is about virtual power plants, which is a sort of biggish topic, but something that I just wanted to graze the surface of whilst we had you both here. So for those unfamiliar, virtual power plants are effectively kind of an aggregation of a number of smaller power plants, which are then operated by a single operator to act like one larger power plant. I just sort of, as Steve and I are moving on to talk about business cases next, it feels to me that this is one option to make sort of some of those smaller power solar plants, which probably don't look viable on their own, look a little bit more attractive. But I was just wondering if you'd seen, both of you, that much of a trend towards them, and whether you'd had that much involvement with them, because I think it's still something that the really sophisticated market operators are probably doing, but probably not others.
Yeah, so I think I agree with you that especially for some of the smaller players, it's probably quite a good route to market, because basically then they don't have to go and deal with all that complexity that we've just been talking about. For the same reason, smaller operators wouldn't necessarily come to us to ask us for advice. So that's something that we're a little bit less exposed to, basically. But that's something that we've heard of, especially from a little bit more the aggregator side of the story.
Well, of course, on this, Steve, I've been involved in it at a personal level, if you sense, because I was a member of the Tesla Energy Plan, and I've got 5 kilowatts of solar panels and a Tesla Powerwall 2 battery, and entering into that plan, Tesla effectively take control of, I don't know how many there are, but I think it's hundreds of thousands now of batteries, and then aggregate the power and sell it on the markets. And you get a benefit of a very low price, which was very low, about 11 pence a kilowatt when it was treble that, for agreeing to do that. So I think the principle is definitely there for us in our work with local authorities, Manon. There's a number of regulatory complexities around this as well. So one of the things that we're interested in is peer-to-peer trading, which could work on the back of this type of scenario. But of course, as soon as you get consumers involved in it, you can't do it, because you need a supply license and all the rest of it. So these are things of the future that we would like to see a new government come in and start addressing, really, because they're actually quite important to the public sector, well, and the community sector for that matter as well.
Yeah, and I think it's also like, what is the role of different parties and how you can involve the suppliers as well, as a means to reach the consumers in that space.
Yeah, I think that's right. I think that's quite a helpful point on which to end. I just one sort of gap for kind of final thoughts. I don't know. We've had quite a wide-ranging discussion, but Manon, we always give our guests kind of a chance to just kind of have a final say or a final thought on kind of maybe in this case with the new upcoming government potentially coming on Thursday, you're kind of, if you had a magic wand and a couple of policy reforms, what's the thing that you would most want to see in the GB market? What's the single change that you think, gosh, this would be really helpful for unlocking things going forward?
Well, I'm a major CfD fan, so I have to go back to CfD, and I think, increasing the budget, but also reforming some of the parameters, which mean that budget could actually go further, and support more projects, basically, would be very, very helpful.
Sounds really good.
I'm on similar ground, but I'm a bit further up the policy chain, if you like. When you think about it, the government's actual plans, following advice from the Committee on Climate Change, have been challenged in court twice as being inadequate. So we don't actually have a proper plan to show how we're going to meet the carbon budgets going forwards. And I think if we rectified that, it would give the market some considerable confidence that we are actually serious about it, which would filter down to the actual money coming in and the projects being developed.
Fantastic. Thank you very much both for joining me as ever. And we've got 3 days to go to a new government. So who knows, Steve? They might come in day one with a whole new energy plan. You never know. Maybe Sir Keir Starmer's got one hiding in the back of his manifesto.
We live in hope, don't we?
So thank you very much to Manon Derelle and to Steve Sorrell, and we'll see you all soon for another episode of the Green Steves podcast. Thank you very much.